I'm Sean Reynolds, the owner of Summit Properties Northwest and Reynolds and Klein Appraisal. And today I have with me Mr. Dan Chapman from Fairway Independent Mortgage, and we are going to talk about VA loans. And you and I were just talking, and you closed a VA loan how recently? It was like a few days ago?
About 5 days ago. Yeah.
5 days ago.
Yeah.
Okay. Tell us a little bit about how VA differs from like conventional FHA.
Yeah.
Give us a quick rundown on what a VA
VA
loan
is quite different even than FHA. I mean, you've got zero down. Obviously, you have to be a veteran.
You got to be a veteran.
Yes. Yes. This is one of the rewards for being a veteran is you get a property with zero down and no private mortgage insurance. So it's a great opportunity for veterans, especially if it's their first purchase and they've never used it. That kind of goes down another road. You can't have multiple VA loans.
You have one loan at a time.
Yeah, one loan at a time.
Right?
So if you do buy VA and you want to buy another one, you either need, if you need to sell that and get out of that, or you can refinance to conventional and then go buy another, house zero down VA. So you can use it again. But VA is basically, if you're not a disabled vet, there is an upfront funding fee that varies based on the down payment and how many times you've used your VA guarantee, because there's a guarantee amount that they will guarantee and they allow you to borrow on. And that's usually a little over 2%, that funding fee. So that gets financed into your loan.
So you're going to pay for that over the course of
it gets financed into your loan. Correct. So that is not out of your pocket, but it does go into your loan. So it does make your loan amount a little higher.
So it's wrapped up.
Yeah. So if you're buying a $500,000 home and that funding fee is 2.1%, that gets added on to that $500,000. Now, if you're a disabled vet, good news, you're exempt from that funding fee.
Okay.
So you don't have it.
Okay.
So you save. I mean, if you're
Is
disabled,
that disabled in the line of duty or
all it would say is it would say on your certificate of eligibility if it's disabled, and it say exempt from funding fee. It'll say that on there. And then like if you're disabled, like I've got a relative is an ex-Marine and he's disabled and he gets a monthly check from the government for his disability that happened when he was in Afghanistan. So. So you don't have to be like in a wheelchair disabled, but military, whatever happened, you
meet the classification.
You got hurt. Yeah, you got hurt in the line of
disabled.
duty, and you're never going to be 100% again. So they give you a certain amount of money that disabled.
What if you were dishonorably discharged?
You're not getting disability. Yeah, you're probably not.
Can you get a VA loan?
That's a great question. I don't think so.
I was never in the military.
I don't think so. If they pull that certificate of eligibility, if you don't have that certificate of eligibility, you're not getting one.
Okay, so more than likely, no.
That's a very good question.
We could probably Google that question.
Yeah.
Raina?
Yes.
So what are the down payment requirements for VA? You said zero down.
Yeah, zero down. And if you do want to put money down, which you can, I've done some VA loans where somebody will put money down because they if you put more than 10% and you're not disabled, the funding fee is lower. So it's sort of prorated somewhat in aspects based on that. But you can put money down on a VA loan, but it is zero down.
Okay.
Yeah.
Okay. And so you can put money down, but you don't have to because it's built in that zero down is kind of the pro forma for a VA loan.
Yep. And as far as rates go, they're very similar to FHA. Sometimes they're a little bit lower even than FHA. And then, it's underwriting is, it's fairly thorough on underwriting, but it's not. They'll go high on your debt to income ratio. I've gotten some approved, well above 50% on your debt to income ratio with FHA and VA, both government loans.
Okay.
So it's a little more lenient on that than say conventional, where conventional is not going past 50%.
And we talked a little bit earlier about FHA being an insured loan by the government, whereas VA, as I understand it, that is a guaranteed loan.
So
maybe tell us the difference between
the
two.
Insured is like they're going to cover if they default on the loan, the FHA entity, the government entity, is going to get a certain percentage of that money, and they're going to pay the lender that money. So whatever percentage that is, that may be $100,000 on a $400,000 mortgage liability that the FHA would give the lender back if they defaulted. Whereas VA is going to guarantee it up to a certain amount, and if it's usually the whole thing. So unless they're buying above the VA limit, then it's not above that limit. So and that's where you get into a little more complex information on that. But
and on the Reynolds and Klein side, we've done tons of FHA appraisals. We've done tons of conventional appraisals, a lot more conventional than FHA, but we've never done a VA appraisal, and that's because the VA appraisal panel,
very good point,
up until a few years ago, was pretty locked down. That was an old boys network.
Yes.
That's been opened back up, but that's also a consideration for buyers and homeowners, is that you've got a VA borrower coming in. Property is going to be under some more scrutiny. What kind of experiences have you had with a VA appraisal coming back with a bunch of work orders?
So I've had them. It's been a few years. The one I just closed last week had no work orders. It came in at sales price. It took 2 weeks because we're talking about the government.
Yeah.
I mean, they order the appraisal.
Yep, and they've got a strict appraisal panel.
Yeah.
And they go off of this rotating panel.
Yeah.
And if they're
And if you're not a VA approved appraiser,
you're not on
You're not on that list.
Yeah,
And
so that's
I'd
a
imagine
limited
as an
list.
appraiser, you have to do something to get certified to do VA appraisals, right?
You have to want to be on that panel. VA also fixes the fee.
Yeah, it's probably low.
I think it's not bad now.
Not bad now?
Yeah, it's
Okay.
just you got to jump through those hoops.
Yeah.
And you're dealing with the government. FHA, same thing. It's going to be underwritten a little bit different.
Yeah.
So do you want to jump through those hoops? Because if you're doing a ton of conventional work,
Yeah.
you don't need to do FHA.
Yeah, VA ordering appraisals, we don't order them.
Yep.
The VA orders it, and they choose the appraisal. So whereas FHA and conventional,
You're
we're
totally
ordering.
out of the process. You have zero control. Not like
Zero
you have a lot of
control.
control over FHA or conventional, but you have a little bit more access.
Yeah, we can talk with our appraisal management company. Hey, can we get this appraisal back by this date?
Yep.
With VA, it's like we'll send it to you when we get it.
So on that note, does it take longer to close?
Yeah,
a
I
VA
mean, I
loan?
typically don't promise anything quicker than a 30-day close on VA
Okay.
because we just don't know when that appraisal's
Too
gonna
many
come back.
variables.
And they typically
Yeah.
take 2 weeks. So,
Okay.
unless we get in a loan approval ahead of time, we gotta say 30 days on the closing date, and we'll be able to close it. So.
Okay. Now we talked about a condominium being on approved FHA. Does VA have the same thing as far as like a condominium approval? Does the unit have to be approved?
Yeah, no, it's different than FHA. FHA, you've got to have that unit approved, whereas VA, they're guaranteeing, like you said earlier, the whole enchilada, so to speak. So they're not like as strict as FHA on that.
Okay, so a little more leniency there.
Yeah, definitely.
Okay.
Yeah.
Anything else that would differentiate VA from a conventional or an FHA off the top of your head?
Other than that upfront funding fee and the fact that you got zero down, those are the two main things that people want the VA loan for, is zero down.
Okay.
And then, if you can avoid that upfront funding fee, like say I just closed a loan this year where there was a veteran and they decided not to go VA because
They had a better
they
option.
did not want to pay that 2.1% upfront funding fee, and they had a down payment, so they went conventional.
So even though it's zero down, you got to pay that upfront funding fee.
Yeah.
That gets wrapped up into your loan.
Yep.
And so it comes down to a financial consideration. Do I want to go this route or this route?
Yep.
Here's where I'm at.
I mean, if you're a disabled vet, it's a no-brainer. No funding fee.
Right. Why would you do anything else?
Yeah, and the rate's great. So
Yep.
it's not going to be much. It's not going to be a huge difference between conventional and VA.
Okay.
Sometimes VA can be lower even. So.
Very cool.
Yeah.
Well, Dan, thank you so much for sharing with us a little bit more about the VA loan process.
welcome.
Great to have you again.
Thank you for having me.
Again, I'm Sean Reynolds from Summit Properties Northwest and Reynolds and Klein Appraisal. Dan Chapman from Fairway Independent Mortgage. Thank you. Here's the Summit difference. We offer an industry-high 80-20 split with absolutely zero fees, a low $10,000 cap, and a free listing video including drone for every single home that Summit Properties Northwest lists. For more information, click on the first link in the description of this video.